You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 19th of October, 2015. We always start with IYY, which is the total market fund. Now, this is different than our daily broadcast. The weekly review and forecast, we look at the weekly charts on our three indexes. That's IYY, the total market, SPY, the S&P 500, and QQQ, the cubes, the Qs, or the NASDAQ 100. You can also look at it that way. And gold. So let's start with the total market. It crossed over going down back in the beginning of June 2015 this year. And it's hard to see with the huge drop that occurred, this one-day plunge that happened back on the 28th of August when the 28th of August, when we saw the market drop like a stone and then catch itself, move back up some, and then track down and back up again. But that sort of skewed our whole chart. It's hard to see anything that happened before that or after it. We have to really zoom in. So by doing that, it does show us what's been going on over the last few weeks as the market has tried, and I'll back out a little bit and let you see what's actually been occurring as the market bottomed out and the MACD is about to cross over going up, it appears, on the weekly chart, perhaps portending a greater move up if it actually does that. We always look for the moving average convergence divergence to cross the signal line in the direction where the blue leads the way. It means it's an up move. If red leads the way, it is a down move, as it has been for the last many weeks. But what happened over the last few weeks? Well, as we zoom in, around the 2nd of October, the market bottomed out, and then the market has recovered over the last 2 weeks, the week ending the 9th, and then the week ending the 16th of October. The market has resumed its upward movement. It actually pushed through a self-imposed ceiling that the market had sort of put on itself. It pushed through that, ending the week. So we have 2 up weeks, and the market actually ended above the 2-day trend line, which is shown on our chart by a blue line. Now, so we don't have a crossover, not a confirmed up move yet with the indicators, but it does appear it's getting close. The derivative oscillator has continued to lose its downward pressure and appears to be getting ready to flip over going up, and it looks like the MACD is getting ready to cross. Now, if we revert over to our daily chart, again, something we only do once a week, when we look at the movement throughout the course of this past week, starting on the 12th, we can see that we had some down pressure on the first day, a doji the second day of the week, on Tuesday, where it was really questioning what the market was going to do. It just could not sustain any movement above the purple line, and the market dropped over on Wednesday and then tried to push up through it on Thursday and then pushed up solidly on Friday, and that is where the total market is right now. Again, a confirmed up move since the market crossed over on the 2nd of October and has continued to move up. The derivative oscillator has been losing some speed, and we see that over the last couple of days we've had about the same separation between the MACD and the signal line. So that is where the total market is. We're going to go back to our weekly chart and we're going to look at the S&P 500. What do we see going on there? Well, it's trying to cross over going up on the weekly chart, a little bit closer than the IYY. And again, the IYY represents total market. The SPY is the S&P 500, so 500 big stocks. It has barely pushed through, but appears to have pushed through the 2-day. Well, it's trying to push through that ceiling. It is above the 2-day trend line, and we'll continue to watch how the total market reacts. Hasn't crossed over yet, but sure appears to be doing that. When we go to the daily chart on the S&P 500, we can see that it did pushed through the self-imposed ceiling, and it has been going up since I guess that's the morning of the 2nd of October 2015. It's a confirmed up move. The derivative oscillator has lost some of its steam, but there doesn't appear to be any significant converging that is coming together of the MACD and the signal line. So it's a confirmed up move on the one-day chart. Still in a down move on the weekly chart, but appears to be getting close to crossing, but it has not crossed yet. We're going to go back to the weekly chart and we're going to take a look at the Qs. That's the NASDAQ 100. It crossed over going down on the week ending the 7th of August and has continued to move down since then. Considerable down movement the week of the 28th of August, and then through September it really has just been sliding sideways and then started moving up. Still hasn't recovered to the point of where it started the original down move at about 108.71. It has been moving up for the last couple of weeks. No crossover yet. Derivative oscillator is losing some of that downward pressure. If we revert back to our daily chart, what do we see? Well, we see on the daily chart that it is above the 2-day trend line. It has continued to move up since it crossed over going up in the on the, I guess, the morning or the afternoon, the morning of the day of the second it crossed over going into the 5th. That was sort of on that Friday, and it's continued to move up. It took a breather for 2 days on the 13th and 14th, and then surged back up with the biggest movement on expiration Friday, the 16th. Incidentally, that expiration Friday has been down 8 of the last 11 years, but it did go up on this Friday. That is not usual, but it did. So that is where the market ended as far as the NASDAQ 100 goes. Now, lastly, we're going to go back to the weekly chart. We're going to look at gold. Gold has been moving up substantially since about the 18th of September. Moved up the week of the 25th, sort of took it caught its breath the week of the ending the 2nd of October, and then the week ending the 9th and the 16th, gold surged up. Gold is in a confirmed up move on the big weekly chart. Now, if we revert to the daily chart, you're going to see something a little different. On the daily chart, gold has been surging up on the daily chart since the 5th, going into the 6th of October, crossed over on the MACD back on the 5th, crossed over on the derivative oscillator on the 7th. Gold took a bit of a breather the 7th and the 8th and then continued to surge up since then. It ended the day on Friday, though, still have a hollow red candle, and under the type of candlestick chart we're using there is a sign that there's still upward pressure, but it does appear to be waning. And again, if you listen to our daily broadcast, you know that we prefer, if you're going to really be serious about gold, to follow our 4-hour chart, the half-day chart. But gold did lose some of its steam on Friday. It could just be catching its breath as it did on the 7th and 8th and getting ready to move up again. Has not crossed over yet going down, so continue to watch it. It's a confirmed up move on both the big chart and the daily chart. That is the weekly chart and the daily chart. Well, that is where things have ended the week as far as the 3 indexes that we follow and gold. Please pay attention to all those things and realize where those markets are at the current time. Let's glance back for just a minute, however, and take a look at what actually came out this last week that dealt the market's problems, concerns, got it to go well. Well, we saw that U.S. retail sales were reported as sluggish. That lackluster performance of U.S. retail sales, along with things like global inflation measures dropping, China's trade data being disappointing, all that lackluster economic data, if you can believe it, led to not a fall in global stock prices, but actually a rebound. Why? Well, investors expect that central banks will extend their policies of free money. And again, everything in the world now appears to be all about free money. If the money's free from the central banks, the markets rise. If the central banks talk about raising interest rates or actually do it, the markets crash. So we're not talking about profits. We're not talking about making money. We're talking about getting free money. And as long as it's free, apparently the markets just continue to move up. U.S. retail sales edged up a little bit for the month. As reported, U.S. retail sales increased about 0.1% in September. U.S. sentiment, consumer sentiment, is noted as rising. U.S. industrial production falls again, the second straight month. U.S. jobless claims did fall. U.S. inflation is listed as flat. We see that China's CPI shrinks again and its PPI plunges, and their exports are weaker than expected. So again, if bad news is what you're looking for and having money remain free for the big banks, well, that's what they like to hear, and apparently that is what we're hearing, but it doesn't make the market go down. Isn't that fascinating? But you know what? What do? We don't pay attention to the noise. We watch the charts and continue to watch the charts. Don't be fooled by what you think the markets are going to do. Watch the charts. They will tell you in many instances, well, they'll tell you exactly what the market is doing. And again, if you follow the past, you can many times help predict the future. What do we have this coming up week? Well, we're going to see toward the end of the week on Thursday that the European Central Bank is going to announce its monetary policy. So pay attention to that. Mark Thursday the 22nd down on your calendar. You're going to see some other things. The week's going to start off with China's third quarter GDP being announced. That's on Monday the 19th. Then you're going to see on Tuesday, they're going to talk about U.S. housing starts. So pay attention to that. Not as big a deal as what's going to happen on Thursday with the European Central Bank announcing its policies, but watch that. So watch China on Monday, watch U.S. housing starts on Tuesday, and then again on Thursday, UK retail sales are going to be released, so you can get some idea as to how England is doing. And then the last thing that's going to happen in the week is Eurozone Composite Purchasing Managers Index is going to be reported Friday. Not that that's going to make a big difference. The European Central Bank, something to really watch for on Thursday. If you aren't already tuning in and listening to our daily review and forecast, please make sure you do that. That's very important, so that you have an idea as to what's really going on in the markets. We review them intimately every day, looking at a 2-day and a 4-hour chart. And if you want to learn how to trade, or you'd like to get our charting layout, those two things are easy to do. They just require you to send an email to CW, as in Charting Wealth, CW@chartingwealth.com, CW@chartingwealth.com. Just ask for either one or both of them, and we will send you the charting layout, in addition to a link to the 15-minute online video where you'll learn how to read a stock chart. That is the key to making sure you can figure out what's going on and not being fooled by the talking heads. They say all the time on Wall Street, you buy on the rumor, sell on the news. You can watch the rumors and the news as you follow the charts. What we mean by that is you can see the bump up. You can see the play taking place. And if you get in at the right point, great, but you sure don't want to buy when the play's over. Charts allow you to follow and see what's really going on real time. We do appreciate you joining us. We love to hear from you. Follow us on Facebook and Twitter. Go to our website. Go through all the different training modules we have there. Learn about the market. Don't blow yourself out and try to do it all in a day, but just start spending a little bit of time every day. And before you know it, you'll know what's going on. Thank you so much for joining us from chartingwealth.com.